If you've been into options and you're wondering what type of returns you can get trading options, well, you're in the right place. In this video, I'm going to show you my P&L for the year 2021 selling options. I'm going to show you how much money I made, what are the returns, how much money I put in the account in the first place. So let's get into it. We can see the P&L year to date. So we can see that on this account, I made $5,376 since the beginning of 2021, since January 1st, 2021. So how does that work in terms of returns? Well, there are a couple of things that you should know. You can see that the net liquidity of this account is $27,700 basically. On January 1st, I put in this account $12,200. So I started trading with this, and throughout the year, I started putting more money into her accounts. After having added $5,000 to those $12,000, I ended up with $17,000, and that's where mostly those gains are coming from. So when you see that number $5,372 as P&L year to date, I made that money using $17,200. So if we divide $5,377, my P&L year to date, by $17,200, that makes a return of around 30%. So I basically made around 30% of my account since the beginning of 2021. But as you can see, this is not really like an income that you can live off of it. I mean, it's quite nice to have this on the side, but I'm not living off of it, of course. I really see my trading account where I trade options as a big saving account, as an investment account where I'm making my money grow, and having a return of 30% throughout the year is really, really good, especially when we see that the SPX return around 20%. And that's how I mostly compare myself. Like, I will always compare myself to, for example, the index, the SPX, so I can see what is the performance that I'm achieving against the benchmark. Because if you're achieving less than the benchmark, then we can fairly ask ourselves, is it really worth trading options if you could just put your money in the SPY and just have it rise like this throughout time without doing anything and still achieving better returns? Another tab that is very interesting, if we look at, for example, the history tab, we can see that I selected all the trades for the year to date, and we can see that I've made 787 trades since January 1st. And if we go in my activity tab, you can see the same. We can see that year to date, somehow it shows a different number. Here it shows like 890 trades. I don't really understand why it shows a different numbers than the history tab, the transaction tab, but it is what it is. So you can see that basically I've made all those trades. I mean, since January 1st, I've really made a lot of trades. Otherwise, another tab that is interesting, if you go into the transaction tab and the year to date tab, then we see a P&L for the year to date for each and every single stock that you've been trading, stock or ETF or futures, whatever you've been trading. And that's really quite interesting because now you can really see which stocks were the biggest winners for you, which stocks were the biggest losers for you. So if we, for example, sort it out by the biggest winners first, we can see that X, CLF, FCX, Alcoa, I mean, all those stocks were basically my biggest winners. And then if we sort it by the biggest losers, we can see that EWZ, GPS, Bank of America, those are my worst trades that I've had. Something to know with those three big losses, because we see that it's mostly those three, and then it goes to $48, so it's really not at all the same scale as the first three ones. Those ones, I'm fighting for them as we speak right now by rolling those trades to a later expiration. So I'm never going to give up on, for example, like a loss of $500 on EWZ. If it takes me like a year to get back my loss, I will roll my trade for a year and I will get back eventually. So that's something that really saved me over 2021, is to always roll your trades, you know, just give them duration, always collect a credit when you rolling your trades, and usually it goes fine. As I told you, I only had like a couple of trades that went wrong. I think I had like a trade on Bank of America, of course, KR, and also FCX. I think I had 3 trades overall during the year that went wrong, really wrong against me, where the stock went 20% against me, something really nasty, but I made it alive out of there, so it's fine. Unfortunately, and I wish Tastyworks was doing this, that would be interesting to see a P&L over time and also a daily volatility of the accounts. As you can see, for example, on, I think it's on E-Trade where you can see this, it's on Thinkorswim. Unfortunately for Tastyworks, they don't have this functionality. I really wish they had, because I'm all for transparency, and that's also why I'm making this video. I also want to show, you know, what type of results you can expect trading options, especially selling options, but unfortunately they don't have this daily graph where you can see the portfolio value fluctuating over time, because usually that gives a pretty good indication of the volatility in an account. So unfortunately, you have to trust me on my words for this. Basically, in terms of daily volatility, it was really rare to see, for example, a 1% volatility in my account portfolio. So for example, if I have like a 27,700 portfolio, it was really rare for me to see, for example, days where I had $270 either up or down. And I know that, for example, today I made $366, but today there is volatility. For the last 2-3 weeks, I think we've had the most volatility in 2021. My biggest learnings about 2021, if I had to sum up like what I learned, if there were some takeaways, I would say, first of all, my first big takeaway is that position sizing is probably the most important thing that you can always take care of. Know that you can come back from any mistake. Like honestly, you can come back from, trading, for example, a put instead of a call. Like you can do plenty of mistakes and always come back from them. However, and trust me on this, you cannot come back from trading too big. When you're trading, I really realized that, your capital is really your engine. And if you don't have capital anymore, then you cannot operate that business. And that's really important to understand that. So every time you trade, it's really important that you're mindful about the size of your trade. For example, I'm always going to sell 1 contract, 2 contracts maximum, depending on the stock, if the premium is not big enough, but usually I'm going to stick to 1 contract that I'm going to sell just to make sure that I'm safe. And to give you some kind of benchmark, I usually stick to around 2% per position, meaning that one position in terms of buying power required, it has to be 2% of my overall portfolio. That ensures me that I'm not trading too big on any single position. And I thought that that was a big learning in 2021 at least. Also, another takeaway is that selling calls is a pain. I mean, of course, it's a pain when the market is going up, and it would work a lot better if the market was going down. But when you're selling calls, you have to understand that this is going to be painful, especially if we are in a market like we're in right now. But I really think that this is important to still have some, for example, bearish trades, so you do not only have like either a long portfolio or either a short portfolio. It's nice to have like a bit of both, to have some long trades and to have some short trades. And I found that it was a lot more beneficial for me to have like the two, even though selling calls is more often a pain than selling puts, just to have that balance. Another takeaway, and that's something that I suspected a lot, is that hitting steady gains, small but steady gains, is way better than trying to hit home runs. And that's what happens when you're selling options. You tend to have a lot more small gains than huge gains. And that's why people are saying that selling options is picking up pennies in front of a steamroller, is because you only have tiny gains and then you have a big loss that is going to, put you in a loss overall because your gains are so small. And to counter that, like, you really need to start selling options that are closer to the at the money strike. Don't go too far to the at the money strike, because that's really going to be like picking up pennies in front of a steamroller. If you only collect like few cents of credit, it's not going to be enough when you're going to have a loss. So that's something that also another takeaway is that you need to really go get your profit. When you're selling options, don't be afraid to go to the closer at the money strikes to have more credit, even though you have more chances of finishing up in the money. Otherwise, what were my favorite strategies for 2021? Well, mostly, it was about selling puts, selling naked puts, selling naked calls, selling put credit spreads and call credit spreads. Those strategies, I've been using them like a lot, especially when the VIX was low. I tend to sell credit spreads when the VIX is lower, and I tend to sell naked options when the VIX is higher. And the reason I'm doing this is that when the VIX is lower, I want to protect myself, because the lower the volatility, the actually more dangerous it is to trade, because it's when the markets are complacent, it's when nothing is happening, that you're going to get crushed all of a sudden if you have been selling too many naked options during a low volatility times. And if there is a crash that comes, you're going to suffer a lot. Hence why I like to sell credit spreads when the VIX is low. So what's my plan for 2022? What am I going to change in my strategy trading options? Well, to be honest, I'm not planning on changing anything. I'm actually planning on exactly doing the same thing. If I can keep on doing the same thing, if I can keep on making trades and trying to make sure that I have a balanced portfolio, I'm not too heavy on the long side or short side, and I still manage to collect my gains without having a market crashing, well, that's probably going to be a very good year. But that's the thing, you have to understand that in that position, the way I train myself, if there's a crash that happens, that's that's going to hurt. What I mean is that obviously if I'm selling a lot of puts, then it makes me vulnerable if a crash is going to happen. So you really need to choose your camp and see what you're comfortable with. Would you rather sell puts, make money most of the time, but when there's a crash you're going to get hurt? Or for example, sell calls, most of the time you're going to basically lose money because the market tends to grind up, but when there is a down move, when there is a crash, you're going to make a lot more money. I hope that was interesting to see what my P&L looks like, what are the results, using which strategies. If you have any questions, please don't hesitate to put them down below. It's always a pleasure answering your questions, so if you have any, feel free to post it. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.